What's going on, crypto bulls? We are going to look at some charts today. Sorry, my microphone isn't as good as usual. I'm away traveling and I forgot to bring my dang microphone with me, so I'm just using the internal microphone on my computer. I have the Ethereum chart up here. Make sure you check out, but before we get started, hit that like button, hit that subscribe button so you do not miss this stuff, because on this channel, I teach you how to accumulate crypto without necessarily spending a ton of money. Ideally, without spending any new money at all in a bull market. Don't know what I mean? Stick around. Let's dive into the content. First thing I want to talk about is leverage trading. Now, leverage trading is very powerful because you can take your Ethereum, you can take your Bitcoin, and you can accumulate without spending any money. On leverage trading, for instance, let me show you a trade that I took. But first, you got to understand these charts. Again, my goal of this channel is to help you accumulate crypto, because the more you can have, the better your future, financially speaking. But it's not financial advice, because I'm not a financial advisor. But it's my own opinion. Here we go. So check this out. I got this chart up, and as you see here, this is the price of Ethereum. It is on the 1 hour time frame, so each one of these candles represents the price range in an hour, at the bottom and the top. And overall, if it's red, it went down from where it started, and if it went up, it's green. Okay, I think you probably know that. Now, what we look at here, all these lines you see here, like, dude, what are all these lines you have over here? These are Fibonacci retracement patterns. Now, I use TradingView, and I can't show you right here because I'd have to minimize the screen. But you can get a Fibonacci retracement. What you do is you say, hey, all right, well, here's the bottom of this, and then you click. And then you bring it up to the top of a significant top, which would probably be, in this case for Ethereum, somewhere around 4,000, because that was the top of where this has come down from. In this particular time. So that would be one of these Fibonacci sequences. I'd also go from down here. Actually, I would go from the very bottom, well, from the very, very top of this bull run, the all-time high, like 4,400, I'd go from the top, and I'd go all the way down to the bottom since that point, which was about 1750, something like that. And that's what gives me this humongous one you see here, like this whole humongous purple and green. This comes from that. The smaller the box, right? You can see these boxes. I have 4 boxes in here, I think. Maybe 3. No, I have 4. As you can see, this humongous box is the second biggest box here. See? Third biggest box, fourth biggest box. So the bigger the box, the bigger the Fibonacci retracement pattern. I'll get into what that is in a second if you don't know what it is. The longer the time that I went from the bottom to the top. You know what I mean? So the biggest one is over like through June, July, August, September. It's over 4 months. This one is over more like 2 months, like a month, and then like a week. Okay. Phone just dinged. It's getting me. Wait, what happened? It's Bleacher. Okay. I thought I was TradingView. I set up alerts on TradingView for when I hit certain prices, when cryptos do. So, all right. So these lines, they're so significant because they show spots of support and resistance. Think of it as a floor and a ceiling. So as you see, you know, like right here, came down, hit that line pretty much exactly and kind of leveled out, then bounced up, and then went up to this line, went back down to this line, went up a little, and then said, screw it, we're going through it. And went through that one, went through that one, and it came down here, and then kind of rode along this line, then came down, busted through that one, rode that one for a little bit. You see these wicks here, the wicks on the candle, you know, they tap these lines so often. Right, and then we come down here, and then it goes below, but it shot right back up, and it rode here for a bit, went up to here, hit this line, went well below this one, right in this big fat zone. That's why it dipped down so much, because you see right here, there's no lines in this big fat zone here. And then it came back up, and it hit this resistance, this Fibonacci line, and came down, and basically hit this one, but that wick came all the way down, as if you can see, almost perfectly to that line. This is where the Fibonacci lines were. I didn't say, all right, let me place this just perfectly. Although you can do that. If you can make a Fibonacci box afterwards, retracement pattern, excuse me, but I call them a box because they seem like a box to me, you know, rectangular box. If you can draw it and just hit these spots that well, go ahead, but you don't have to, because if you go from the tops and the bottom, these beautifully natural lines show up, because it's a kind of a law of nature, this whole Fibonacci thing. Fibonacci was a person a long time ago, and he discovered these patterns in nature. Like, you see them in seashells, you see them in leaves, you see them in blades of grass, you see them in cells, you see them in waves, you see them in everything. And it's like, wow. And so the way we operate, it's funny enough, is you will do these things in these kind of Fibonacci patterns, whether we mean to or not, which we don't mean to. We just tend to kind of do that. And then you see, anyways, it hit this. And this, when you see a spot like this, his green line and this purple line, red line, excuse me, this is called a golden pocket, okay? And it can have the top, but it can go down to the bottom. This is usually a really strong zone of support and resistance. So I came here, and here's what I did. I got this indicator down here. This green dot down here, you see how low it is, right? It's lower than basically all the other dots. Be sure to look forward, because looking back doesn't necessarily matter in this case, although it will in a second. You see that this bottom, this green dot indicates a bottom, right? Because it went sideways for a bit, it kind of held it for a little while and said, all right, we're going to call this a bottom. And the reds represent a top. So, but then it went down more, and it had another green dot right here, right? See right here? And it correlates with this price up here. This was another bottom, but you know what? This price was much lower than this price. So wouldn't it make sense that this green dot, this momentum wave, should be lower than this dot since the price is lower? Yeah, normally it is. But this is the beginning of what we call a bullish divergence. And it came to a level, a Fibonacci level. You always want to see it come to a Fibonacci level first and foremost, and then you want to see bearish or bullish divergences, whatever it is. A bullish divergence is when the price is coming down, you think it's, and bullish is showing that it's going to go back up, and the opposite for the bearish. Price is going up and it hits a level and it starts showing bearish divergences, which I don't have any on this chart right here, but you can imagine it's the same thing. The price is, you're making higher highs, but the momentum, the reds, the tops are going down. Okay, now finally we came to this dot. Not finally, we came to this dot, and as you see each time, this green dot here, this green dot that was less momentum than this one, even though the price went lower, it actually went up some. And what did it hit? Hit the bottom of a Fibonacci pocket right there, golden pocket right there, right? And that's a nice little move. If you actually got in down here at 29.21, it brought you all the way up to 31.19. That's a $200 move. If you say you put $1,000 of Ethereum in right here, and it went up, what, 200 bucks? Well, what's 200 bucks? I don't know, 7%, 7%. Well, if you were doing leverage, so you put in $1,000 and you did 10x leverage, that's what trading's all about. It's about the leverage. So now you're trading with, instead of 1,000, you're trading with $10,000 because you got a loan from the trading platform that you're on for a very, very small fee. As a matter of fact, it doesn't necessarily cost you anything as long as you do limit orders. I'm not going to get into all that here. But so it goes up 7%, right? So you got $1,000 of money that you can lose in this. But you were smart and you set a stop loss a little below this, so that you said, all right, if the price comes down to here, just close out my entire order, so you would only have a little loss. And you're going to take losses in this game, okay? But the name of the game is little losses, little gains, and big gains, okay? You have to just accept that you don't even have to win the majority of your trades to accumulate more and more crypto and Bitcoin, right? Because you can lose 60, 70% of your trades, but they're just little losses. But the ones that you win, you can have one good win, and that just wipes all that out and puts you in profit. I mean, that happens all the time. I don't lose that much, but anyways, I was just saying that as an example. But then we come down here and we say, oh goodness, there's another green dot, right? But it didn't hit a level. It tried to, it's just got this, but it just free fall because it's in this big zone with no levels on it. And we're going to dive into the charts and see what I think is going to happen here in a little bit. I just want to explain this to you. I'm not going to do this every video, so watch this because this is important. Especially if you want to, the name of the game, big money wants to accumulate crypto. They want to accumulate Bitcoin and Ethereum. Those are the top two they want to accumulate. I don't think I need to explain why, because they are the big, big, big ones, right? Bitcoin is going to always be the digital gold, the store of value. And Ethereum is the by far and away top smart contract platform. Will it be the only smart contract platform? No. I mean, it's not. There's already other ones, but it will. I think it will. It's a really, really, really good chance at always being the biggest one by far. The king of the category, if you will, a smart contract blockchain. So here we are. We're down here. And it's like, all right, well, if you got in down here, which rarely, well, with that being said, if I'm watching the chart, right, if I'm in my trading account and I see it wick down like this, what happens is it drops really fast. And I know because I start seeing so much price action on the trading platform that I'm like, oh, we're about to have what a buddy of mine calls chickens drinking water. For some reason, he's a farmer. He watches when they drink water and they pop up real fast or they pop down real fast. Yeah, when it's going up, it hits a certain level, it can go boom. But lots of times it happens mostly when it goes down, it pops up real fast. So that's what happened here. That's what happened here. That's what happened here. And that's what happened here. We're going to get to this one. This one's really important. Be sure to hit that like button and subscribe if you're getting value so far. And of course, check out the links in the description because all of those links are to help you accumulate crypto. Like for instance, there's a link for a Bitcoin rewards debit card, which is the best one on the market. You get the most Bitcoin rewards with that debit card. It's simple. You don't even need to apply for it. You just transfer money to it and you buy your groceries, you pay your car, you buy gas, you pay your phone bill, and you get Bitcoin rewards back, which are much better than cash rewards, in my opinion, because you know what? Cash is fiat money. And since the history of inception for fiat money, it just goes down in value. Why? Because they just keep printing more of it. So it loses its value because of the supply just keeps going up and up. Bitcoin, supply is not going up. It's locked at 21 million. Never going to be more than that. Its value can only go up as an asset. In my opinion, not financial advice. If you agree with me though, check out the links in the description. Some really good stuff down there. Plus another one that you can earn interest on your crypto. Like you just leave money on your in your Coinbase wallet or something like that. You know what I'm saying? But there's a place called Voyager where you can do the same thing. You buy and sell crypto and you don't pay any fees when you buy and sell, unlike Coinbase. And when you leave your money in your wallet on that exchange, you accumulate crypto. You accumulate interest. Like my Bitcoin gets about 5.6% interest. And at the first of every month, they pay me my interest. Now the 5.6% is per year, right? But they pay me my 1/12 of that on the first of every month, right? Because there's 12 months in a year. Anyways, if I'm watching this and it comes down real fast, I know that it's going to bounce back up real fast. So I kind of wait to see where it bottoms out. Now this goes against what I'm saying, you know, when I'm talking about finding levels and stuff. I just, in these instances, I know that's what happens because I have experience. And so when it comes down and I see it kind of start to really stop at a bottom and start to go back up, like it goes up, I can make so much money so fast. But it typically tends to keep going back up, especially since we are at least at a level here, but it could have came back down. I didn't get in this trade. But we got a green dot printed. But the green dot didn't print until right here, right, on this green candle. This is the hour time frame, so this is 1 to 2 hours later after it hit this bottom down here, right? Don't worry about hitting the bottoms, all right? If you try to chase the bottoms and chase the tops, you will get burned more often than not. Wait for confirmations and take your gains, okay? So getting in here would have been a good time with that green dot, right? Because you go from, say you got in green dot prints in this candle, and say you get in at 29.50. You're like, that's a nice round number. Psychologically, the market does respond to these round numbers with the 2900, 2950, 3000, 3050, 3100, stuff like that. And then you take a long, you do a 10x, and you go from 2950 up to 3100. What do you know? It hits a Fibonacci line right here. What do you know? What are the odds? You may be thinking, well, you got so many damn lines on there. Of course it's going to hit a line. That's cute. So it hits this line. And then what happens? It starts coming down. But I'm taking profit along the way. I don't just like ride the whole thing up. You know, I got $10,000 in here. You know, right here at 3,000, I'll take out part of my position, maybe 25%, just take my profit. Say when it gets to 30.50, which I see these lines here, right? Here's a line. So I'm like, all right, about 30.45, I'm going to take out another 25%. And then at about 30.75, I'll take out another 25, and the rest I'll do the last 25% of my position, I'll go let it ride. Let it ride, baby. And I'll wait. And I'll put a stop loss probably somewhere around here. I'll move the stop loss as it goes up. Or if I took a short position, which is when it goes down, I will move the stop loss down with it, right? Not right on it. somewhere where, because these things can go up and down. Like look at this. In this hour, this one went from over here, from basically 3,000 down to 2880. So if I move the stop loss to like 2950, boom, I'm out. See, I want to leave some space. Anyways, and I don't like, anyways. So here, top prints, and I'm like, all right, well, maybe I just take it out, okay? So it comes down, and look, we print and we go down even lower, and what does it do? It touches this red line perfectly, which is the bottom of this humongous golden pocket. Humongous Fibonacci retracement, rather. And this goes from the bottom when the market fell from 65,000 down to 30,000, right? So this Fibonacci pocket, this Fibonacci retracement box goes from about 29,000 all the way up to 64,000. So that's why it's so huge. And what do you know? This Fibonacci line ended up perfectly at about 2655. What do you know? Right around a round number of about 2650. And this green dot prints, and it shows me over here. And I was like, you know what? Around 2750 is pretty good. That's this golden pocket right here. 2740 is the top of this golden pocket. And I'm like, this green dot, this is the lowest price we've had yet, but yet this green dot is still higher than this one, and it's higher than this one. So the momentum is clearly moving up, even though the price is coming down, and now we've hit this level. 2650, I'm in. I didn't get in at 2650. I got in at 2742, and I did a 10x leverage position. I don't remember exactly how much I put in, but I took some profits at, because it's been going down so hard that I was extra conservative. So I took out 25% of my profits at like 2780. Yeah, so it didn't go up very high. I just want to make sure I locked in profits because this thing's just been going down like nuts. I want to be conservative. I'm pretty certain because on the 1 hour time frame it did this. Check this out. I'm going to go all the way up to the 4 hour time frame. Look at this. Look at that. Look at that green dot talking about this bottom, and then this bottom comes lower, but yet the green dot's up. This is the 4 hour time frame. This is so much data in each candle that this is typically, when I see a 4 hour candle or 4 hour time frame give me a bullish signal like this and we've come to a level, or it gives me a bearish signal and we've come to a level, I am very, like 98% confident that it's going up, and it's going to have a good sized move because the 4 hour time frame is so heavy. And then I confirm it on the other time frames, like the 3, the 2, the 1, the 45 minute, the 30 minute, and it's just like shows on almost all of them. And I'm like, all right, I am definitely getting in. I feel very confident about this. But I could see before this dot printed, because I saw it on the 1 hour, I saw that this was starting to come out, and I'm like, you know what? This is gonna print a green dot, and that's why I got in earlier, because I could just tell this is a buddy of mine calls it the uneven butt cheeks, right? The uneven butt cheek. The right one's just very uneven here, and the price. So I knew that this was going to print. I was very confident, rather, because I could tell when it was coming down. This top printed, and I was like, you know, this thing is going to print a much higher green dot than over here, but the price is way down, and I confirmed it on the 1 hour, right? So I got in. I took some out here, and I'm completely out of this position now because I took out the rest at 30.50 because I wanted to see, I thought maybe we get to 3,100, and we still might, but I could feel, because again, you see we're in this pocket, this golden pocket, and it kind of hit the bottom of this golden pocket at about 30.70, and it came up to about 30.80, and we get to 3,100, which is, if you see here, the top of this wick right here. Now, that's another thing to look at too. It has a hard time getting past these other wicks sometimes. But if it does get past this 31.11, if it gets past that into this pocket, that's very interesting. If it gets past that, well, you can basically expect it to go up to 3,200 if it gets past these two lines right here. So we'll see what happens. I actually think it will, but I don't have any confirmations on any charts to show that. Let me show you one other thing, because I just saw it since we're on this massive time frame. Look at this. See this red dot? There's the high corresponding with that red dot. Look at this red dot, much lower than the other one, yet the price is much higher. And then we have another red dot, and the price is still much higher than this dot. And it's about the same as this one, but it's much lower, excuse me. The price is much higher than this one, and the red dot is much lower. So it shows momentum is coming down while price is going up. That is a bearish divergence. And finally, on the 4 hour time frame, which is When I see something on the 4-hour time frame like this, I can't remember the last time it didn't go that direction. That's how confident I am, how strong of a signal this is. And what happened? We came to, I mean, heck, if you got in right here, right, on a short and just waited the time, kept seeing this stuff print, just wait, just be patient, or you get in here, right, when that dot prints, and if you're lucky enough to get in right there, you're going to get some real fast price action because we've come from about 4,000 all the way down to 2650. That's why, I mean, I would have taken some profits, right? But I would have left 25% to ride. I probably had a stop loss somewhere around here. I mean, I was in this trade, but I ended up just taking my profits out when we got to about here. Because I was like, all right, I think that's about the bottom, 3,100. I was wrong because I knew we were going up, not because of this time frame, because of other ones. I'm like, I think I'm going to take it out. Now, I took a long position here, made money there, and then I saw a short here on a different time frame that looked like that was a top, and it was hitting a level. What do you know? And it came down. Now I've been riding this one. I still had 25% in here, but I took it out around here, and then I got back in, like I said, 27.42, and but I'm completely out of this one. I took it out around 30.50 because I don't know, man. It's been so bearish. I just want to take my profit out of that one, but I probably should have left it in because overall I'm bullish, but I think it'll come down and I'll get back in. So that's how you do that. Now let's look at the chart. All right, let's look at a different time frame. Let's go to the 60-minute on Ethereum. Let's see what's going on today. See if we can find something. All right, so we've printed a fairly high top. This white line here represents overbought, and this white line down here represents oversold. Okay, so a little overbought. At least in my opinion, because that's just where the line is. The line is completely, you could put it at 80, you could put it at 40, wherever you think overbought should be. This is 60, that's a pretty common spot to put it. Let's go down to a lower time frame. Let's go to 30 minutes. That's interesting, right? Look at this red dot, corresponds with this high right here. And this red dot, which looks the same or slightly lower, but you can still see momentum coming down here, right? Even though price hasn't moved much. This red dot corresponds to this high. So this high is higher than that high. And these red dots are even, maybe this one's even lower. And now momentum's coming down. Now I'm not ready to make a bet on that because we have this Fibonacci line here and it's holding as a support. I'm not ready to make that trade yet. I'm really not. Let's go to the 15-minute time frame. I want to see it on a higher time frame. And we got another strong signal here in the 15. Here it was this one. Look at this low guy. Here's that high. And then here's a lower red dot, but a higher high. Now here's another red dot, 15-minute time frame, not as reliable. The lower you go on the time frame, not as reliable for the moves that are coming. But they're a good way to, they're still useful for sure. Here we got a red dot here corresponding to this high, which is, surprise, surprise, right on this Fibonacci line. And then we have a much lower red dot corresponding to this high, which is how much higher? So call that 30.50, call this 30.90, about $40. That's about almost a 1.5% difference. So that's significant. Plus this red dot is very clearly down and momentum is going down. It is swinging up. We'll see where that red dot is. My guess is that we could see a higher high here with a lower red dot. If we see that, I will definitely be looking on the higher time frames, like 30. I like to see at least an hour. But I will often hop in the trade. Right, and I will set a stop loss. So say that this price, because right here that's the highest we've got, and say this price comes up to, 31.16 or 31.40 where these lines are, but yet it prints a lower red dot. I'm probably going to take that, right? Because this is a level. You want to look at a level, and so this is a potential trade that I'm looking at right now. And I have an alert set on my phone that if Ethereum crosses 3,100, going up that is, which obviously I guess I need to say that's almost redundant, that it's going to send me an alert, and then I'll dive in and look at the chart real quick and be like, wait, what's going on? Because if it goes up to 3,100, we're probably going to get a bottom, which is a green dot printed right here. And then I'll be looking, all right, where's that red dot going to be? Because on the 30, I feel more confident in the 30, but then I'll look at the others, like the 45-minute, right? I'll look at the 60, which is an hour. And if I start seeing it on that type of stuff, although money flow is starting to cross up, that's interesting, right? Look at this back here. Money flow, look where it crossed, right here, crossed down. And that was at 35.30, and look how fast it came down. Now, if we zoom out, we'll see that the whole thing started dropping. Let me pull this down. Oh, not that. No. Where was it? I think it was about right. Dang it, I moved it. Oh, no. I'm just going to leave it there. That was close enough. I wanted to move this down and zoom, 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 zoom. Top of this thing. Now, up here, look, money flow was about to cross over, and when it did, whoosh. Now that's not necessarily always the case. Look, at price went up. Money flow did not really go up much. I mean, it did technically, but it didn't cross the line into green. It didn't really at all until here, went up, and then we saw a nice move, you know. Then we saw a nice move from 3,300 all the way up to 36, I mean, dang near 3,700. And then that was the peak, right? The peak of the money flow, and it started coming down. And you see the price going along with it. And then when it crossed, it really went down, right? And when this crossed, it really took off. Although it kind of crossed right here and went down just a tad. So stuff like that is something else to pay attention to when you're looking at these charts. Let's go to Bitcoin real quick, and then I'm going to probably stop this thing. Give this video a like, subscribe. My goal is to help you accumulate more crypto without having to put in crap loads of money by using smart things that help you accumulate crypto, such as leverage trading. And that's really what I want to help you do, is I want to help you learn leverage trading. Biggest thing I want to help you with. If I could help you with one thing, that'd be it. Because look, if you get in here, look at this. See that red dot? And you're like, boy, but that's over the course of like 3 days. You look at those kind of things, yeah, absolutely. This is the 1 hour time frame. It can take days for these dots to print or for divergences to form. And here we have that, and here's a divergence that formed. And that would have been all right, right? Because you see this dot going with this high, and this a higher high, and you see a much lower low. But we're not really at a level, right? You see we are just in the middle of this thing. But 1 hour divergence, that's a nice gain. If you got in up here at the top, call it 4,800, went down here to this line, to this Fibonacci line, about 47.2. That's a nice move. That's several percentage points. And if you're using 5, 3, 4, 5, 10x leverage, that's a really nice gain because you make money on the way down if you take a short. I should say you accumulate Bitcoin or Ethereum, whatever you're trading, which means you make money. And same thing, I'm like, wait a minute, but these red dots are already printed. How is this one relevant? Well, because it's a higher high. It's coming closer to a level, but it didn't get as high as this. So this whole thing goes on longer and plus the money flow is coming down. So it's like, take another one right here. That's a clear bearish divergence. It's a little under a level, but it's close enough that I'm willing to take a trade and set a stop loss. And then here it is. I mean, I couldn't have known that it was going to come down this much, but you see these divergences start happening, right? Especially when this one took place over the course of how many days? 11 in the morning on the 15th to about 3 in the morning on the 18th. So that's like 2.5 days. How long did this one take? September 19th at 11 p.m. And really, September 21st at 5 p.m. Right? So what did we say here? 20th, 21st. So that took almost 2 days for this to manifest. It came down to this level. And there were nice gains to be had here too, right? That dot printed, make a nice little gain there. But I wouldn't have taken any shorts. Now you can be in a short and a long at the same time, but you need multiple accounts. I see this one printed that dot. I'm like, all right, it's lower, and that's a nice little gain. And then you see a red dot about to print, and you're like, all right, I'm out. And then you wait for it to come down because you're like, I don't know where this is going. We're around this line. Maybe it just sits here. Often I'll usually get stopped out is what will happen, but you don't make as much that way. as if you just go out on a limit order. Because what happens with these platforms is if you place limit orders and sell on limit orders, you actually, not only do you not pay a fee, you get a credit of 0.025%. But if you take a market order or get stopped, you pay 0.075%. Okay? Which is, what? Not even 10% of 1%. It's 7.5% of 1%. So it's very small. But if you're, trading with $10, $50, $100,000, $1 million, that can really add up. But again, it's all relative to whatever you're trading with. I just like limit orders because I could literally place, if I buy on a limit order at say 43,000 and I sell on a limit order at 43,000, I actually made money because I get the rebates. I get the plus a credit of 0.025%, but I'm not interested in those little gains. Now, this other dot prints, and all of a sudden you're like, dang, we came to move all this up. Where did my level go? What did I do? I messed something up. Dang it, I'm going to have to redraw my fibs. Because this hit a fib line perfectly. Was it this one? Dang it. I think it was this one. I'm going to go with this one. See, but it's funny because like when I grab these things, I never mean to. Whatever. Anyways, I'm going to have to redraw my fibs. This came down and it touched a fib line. It must have been this box. I got to move it back down. Anyways, and then printed that dot and you're like, hey, here we go. So right now, like I said, or wait, we went to Bitcoin. Excuse me. But this box is not right. I got to redraw these. But Ethereum, you saw it touch down. You see Bitcoin's kind of riding this one right here, this golden pocket, right? If let's scroll this down a little bit more again. Where is the bottom of this thing? So Bitcoin's kind of scary. That's why I said if Bitcoin goes under 37,000, we may be in a bear market, right? Because here's the bottom of this box. This is the big box from the about 30,000 to 65,000. That's where I drew this box from. If it goes below this and stays below this, I do not feel confident that we are going to reach new all-time highs this year or again until the next Bitcoin halving. So that's what I got for you today. I hope that was helpful. Hit the like, hit the sub. Check out the links in the description of this video. They're all things to help you accumulate crypto. Whether it be having the best Bitcoin rewards card, getting interest on your crypto, not paying fees when you buy crypto, figuring out which are the best trading platforms to use, stuff like that. I have all that as links in the description, so check it out. I think if you go to my website, dailycryptobull.com, I think that link is in the description too. I actually have a phone number that you can text me. And yeah, so check that out. You can get involved in my text. So, and commonly with those, I will send out alerts of trades that I get into, of levels that I think Bitcoin, Ethereum, etc. are coming to look out for possible trades, stuff like that. So go join that. Links for all that stuff in the description. Be sure to subscribe. All right, you are awesome. Hold on to your crypto. Not financial advice. Hold on to your crypto. Stay classy. You're awesome.